QuickBooks Pro Plus Desktop 2022 Bank Feeds Matching Invoice to Deposit. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Bank Feeds practice file going through the setup process with the View drop down, the Open Windows list on the left hand side, Company drop down, Home page in the middle, maximizing it to the gray area. Reports drop down, Company and Financial, looking at the balance sheet standard. We're going to be customizing it with a range change from 010121 123121. Fonts and numbers, bringing the font up to 14 and OK, yes please, and OK. Reports drop down again, Company and Financial, Profit and Loss standard with a range change from 010121 123121. Customizing that report, fonts and numbers, changing the font size, bringing it up to 14. OK, yes please, and OK. Reports drop down, Accounting and Taxes, Trial Balance with a range change from 010121 123121. Customizing it, fonts and numbers, changing the font size up to 14. OK, yes please, and OK. Opening up the Bank Feed Center by hitting the Banking drop down with the Bank Feed Center. We're going to maximize that to the gray area as well. And we're going to go back on over to the Home page. We're now going to be considering a situation where we're deviating away from being simply reliant on the bank feeds in order to record our sales on the revenue side of things. So last time we talked about revenue, we were looking at and depending upon the bank feeds, trying to have a system where we wait till the deposits actually hit the bank before we record them with, in essence, a deposit form using the bank feeds as revenue at that point in time. So now we're going to start to say, well, what if I can't do that? What if I have to basically record an invoice or a sales receipt as I make the actual transaction? We're going to start off with the invoice here. Now, as you make the invoice, that means that you're going to be billing a customer. That means you're in a type of industry, possibly like a bookkeeping service or a CPA firm, a law firm, where you have to actually do the work before billing the client, and then you bill the client with the invoice, and you got to track the receivables to make sure that you get paid on it until you get the money, and then you make the deposit. The invoice then being the form that records the revenue at the point in time the work was done and increases the accounts receivable so that you could track the revenue before, and so that you could track the payment that you are going to receive from the customer. Then we have the receive payment. The receive payment is typically the form that is going to be used when you get the payment for the invoice that you entered in the past, and usually that's going to go into, by default, going into an undeposited funds type of account, which is a holding account that QuickBooks then uses, and then you're going to take that money and put it into the bank account with a deposit form. Now, you might be saying, now, why would we have that undeposited accounts? Why do I have this kind of middle step? Why do I need an extra step from here to here? Why is it going into undeposited funds instead of going here directly into the checking account? You could put it directly into the checking account from here, but they're by default having undeposited funds so that you have a clearing account that can be used to group the deposits into the same format that they're going to be expected to see on the bank statement. That making the bank reconciliation a little bit easier to do. So that's the idea of this undeposited funds account being here and then making the deposit. So then when you're thinking about the bank feeds, the question is, well, I could put the bank feed in place after I make the invoice, meaning I could make the invoice and then just wait till I get the money, wait till the money clears the bank with, in essence, a deposit through the bank feeds, and see if I can match the deposit that we got to the invoice. That's one way you could do the bank feeds. The second way is you could say, okay, I'm going to record the receive payment, put it into undeposited funds, and then I'm going to have the bank feeds match out when it actually clears the checking account to the undeposited funds that will actually record that final step, taking it out of undeposited funds into the checking account. Or you could go through this full process, put it into the deposit, then use the bank feeds to match out the fact that it cleared the bank to the deposit. In that case, the bank feed transaction would not be recording anything new, but simply matching to what has been done in the past. The last method you could use is you could change this setting to record directly into undeposited funds at this point, and then once again use the bank feeds to double check that it has indeed cleared the checking account, the bank feeds not entering anything new, but just giving a double check that there's been a clearing to the bank account. So let's try this first method. I'm going to create an invoice, increase in accounts receivable, other side go into sales, and then see if we could make a bank feed that will basically take that money and record it as being received, lower in accounts receivable, putting it into the checking account in essence. To do that, let's go to my bank feeds and let's think about deposits. So I'm going to go to the filters up top and let's go to the deposits and let's pick a deposit that we're going to assume is going to be revenue from an invoice that has then cleared. So let's just pick this one. So we got the 83.82.39 from Amazon. So I'm going to say, okay, let's go back to, I'm going to say 83.39. Let's make an invoice for that same amount. I'm kind of working backwards. Obviously, the invoice would be created first before it clears the bank. But what I'm going to do is put this into place and then see if we can match it. So we're going to go back to the invoice, imagining that this is what we would be doing first. I'm going to say Amazon.com. And we're going to say this has happened, let's say 09/15/21, and let's set up a new item, let's say number 3, and we're going to set up a new item, and I'm just going to call it a service item. I'm not going to say it's subject to tax, so no tax, and the rate, let's just add the rate as we go. And I'm going to say that this is going to a sales account. Let's say the other side is going to be a revenue account or sales account. So where is this? There it is, sales. So we'll say okay. And then we'll have one of those. And the rate was once again, what was it again? 82.39, 82.39. And we don't have any sales tax down below. So this is a simple invoice. We don't have any inventory we're tracking. It's just going to be an increase to revenue, the other side going to sales. So I'm going to say save it and close it. Okay. And let's check it out on the financials. Going to the balance sheet. We should have accounts receivable going up. Double clicking on the balance sheet. Accounts receivable. We have an increase of the 82.39. Closing that out. The other side's on the income statement. If I go to the profit and loss on the left-hand side and I go into my sales, we have the sales, the invoice for the 82.39 here. Closing that back out. We can also see if I go back to my balance sheet, we're tracking the receivable. So if I then go down to my customer drop down and the customer center, we can now see the receivable here in the customer center for Amazon. Amazon company is the one we used. There's the invoice that we have created here. We can also make a sub-ledger type of report, reports drop down, and we could go to the customers and receivable, accounts receivable, or customer balance detail. Let's do a customer balance detail. And there's the 82.39 here, the total adding up to the 142.39. That should match what's on the balance sheet, 142.39. So now, if I go back home, the next step you would expect is that we've received payment. And if we were doing the full service system, we would record the received payment here. That would increase undeposited funds, other side decrease in the receivable, and then record the deposit, decreasing undeposited funds, putting it into the checking account. But let's say we waited and just waited till it cleared the bank. We just wait till this thing clears the bank and see if we can then match up what clears the bank, the deposit, to the invoice that we have made. So we can go to the bank feeds and see if that is possible to do. So I'm going to say, here it is. Here's the deposit. Now, obviously, we entered the invoice kind of like after, so it might not automatically match it. If it automatically matched it, I'm going to close the caret up top. It would have moved it over to recognized or possibly partially recognized. And if we did it in the proper order, doing the invoice first and then doing this, it might then have matched them. But it's a little bit more difficult for it to do it because really it has to match on just basically the dollar amount and the fact that this is a deposit. So notice that the matching isn't going to be perfect all the time because it doesn't have a whole lot to really match the invoice to the deposit on other than possibly the customer. But we haven't assigned a customer here. That this name is just like in the memo field, the bank jargon. It's not the payee at this point in time. So it doesn't have a lot to match it. So what we're going to do is say, let's go over here and say we want to match and see if we can match this out. And say we're going to match this to the invoice. There it is. There's the invoice. So I'm going to say match it out to the invoice. And so we'll save it. And so that's it. So it should then take this deposit, match it to the invoice. So let's save it and close it. And so it has done that. If I go to the added to register, it has now done it. We expect accounts receivable to go back down because now we've received the payment. So I'm going to open up the caret again. And we will then go to the balance sheet. The accounts receivable should have gone back down. If I double click on it, we've got it going down. Notice it went down with a payment type of form as opposed to a deposit form. So if I double click on this and I go to that payment type form, there it is, we've received the payment. Now notice that this payment type form by default increases undeposited funds, doesn't go directly into the checking account. In other words, this form decreases accounts receivable and puts the money into undeposited funds. Meaning, if I close this back out, it's the same if I go to the Home tab as if we hit this step. And when I go to this step, it doesn't go directly into the checking account, which is where we actually receive the payment. So it would be in the receive payment area. And then if I go to the balance sheet, so that's where it put it, went into undeposited funds. Let's actually see undeposited funds on the trial balance. So the trial balance over here, because that'll show me 0 accounts. Here's the trial balance, here's undeposited. It's back to 0, but you can see what it did here is it basically put it in there with a payment, and then it made a deposit. So it actually did 2 transactions. In other words, by us linking, if I go back to the home page, by us creating an invoice and then recording the deposit through the bank feeds, the system did 2 steps. It recorded the received payment, and then it recorded the deposit. And so we could see that if I go to that detail, it went in and out of undeposited funds, and then it goes out with a deposit form. Here's the deposit form. And the other side, closing this back out, is going into back to the balance sheet, into the checking account here. It's going into the checking account. And there we see it should be increasing the checking account somewhere. What was the date of that thing? It was on, I forgot the date. It was on 11/29. 11/29 is going to be down here. There it is right there. So that's one way that you can kind of add the bank feed. So that's one way you could do it. Go to the Home tab. We could possibly have an invoice and then try to wait till it clears the bank and then record the bank deposit through the bank feeds, connecting it to the invoice, the system then creating a received payment and the record deposits using the matching feature. Now, I'm not sure that would be the best system to use because you'd kind of like to be able to record the received payment, but it's possible to do that. Next time we'll talk about the next step where you could say, well, what if I receive the payment and then wait till it clears the bank so that we can record the deposit, and then we'll do the matching system that we already have the deposit, and we're trying to match that out so we can get an idea of the different kind of ways you can kind of put the bank feeds into a full service, more of an accrual type of system if you have to invoice customers. And then we'll talk about the sales receipt situation, how deposits can fit in there as well.